Twilio Stock massively up after hours here, 27% at the moment. They've just released their Q4 earnings, so we have to dive into the press release to see what happened, what caused this massive increase. So on the left side for that, I've got the Q3 earnings report from last quarter to see what was the management's guidance of Q4 2021 in order to compare that with the press release that we've just received, which is here on the right side. So we can see, first bullet point, the fourth quarter revenue was $842.7 million, up 54% year over year. That compares to a total revenue that was expected of $770 million. So crazy beat on the revenue top line here. Year over year growth crushed, 54% compared to a average of 40% that was expected. So management has definitely, crushed expectations here. And if we look at further down, we have the non-GAAP loss of operations, which was estimated to be around 45 to 40 million, but actually turned out to be 27 million only. So that means that, almost half of what was expected to be the loss because of that huge revenue beat has trickled down to the bottom line, decreasing their loss massively. And then obviously the non-GAAP loss per share was expected at negative 26 to 23 cents because of that beat. Obviously we have a beat there as well, and it's only 20 cents of a loss for non-GAAP loss per share. So definitely crazy beat here. Let's get into the earnings report further to see what else happened. So the second bullet point here: fourth quarter revenue dollar-based net expansion rate of 126%. So the net expansion rate is actually the rate at which existing customers grow their revenue on a year-to-year growth, year-to-year comparison. So we do want to see at least 100%. That means that we retain those customers. The retention rate is at least 100%, and ideally we want to see that getting above 100%. Which here I've got the results from the last quarters to have a comparison. For the fourth quarter of 2019, we had 125%. Fourth quarter of 2020, we had 139%. So now it's a little bit less than that, but still quite a good number, nevertheless. Full year revenue now is $2.84 billion, which is definitely way higher than expected, right? I think we had, if you add up everything together, we had around a $2.7 billion expected for the year. So we crushed those expectations, have now an over 61% year-over-year growth of revenue, which is just impressive. And I think that's what we're seeing right now. Investors reacting to this. Obviously, the stock has been beaten down over the last 6 months, really, from a high of $457, which you can argue that was definitely overvalued at that time, and would still be overvalued because Twilio was always trading rich. Even now we're trading rich here today, and obviously after that increase it's even richer, but that growth is warranting a higher multiple for sure. We're looking at the moment, so even without considering that huge increase after hours, we had a forward PE of 5,000, which you don't just disregard in that stage, because obviously we don't have really any earnings at the moment that we can compare to, and if they make a little profit, that forward PE seems massive, because obviously it's just a small profit. For a company like Twilio, we do want to look at price to sales, which are already at 12. So if you think about a 30% increase roughly, if after hours will remain, the increase will remain in the next trading day. So we're looking at a 30% increase of that, 20%. Looking at a 15-16 price to sales ratio here, which is definitely stretching it. And in this type of market environment, we do have to be careful. But nevertheless, we did see now fantastic earnings I want to just browse through this here to see if there's anything else. Then yeah. So basically, more than $2.8 billion revenue of for the year, says the CEO, growing 61% year over year. The combination of our leading cloud communications platform with Twilio segments, number one customer data platform, gives Twilio an unparalleled view into the customer journey, and I've never been more excited about the future of the company than I am today. So we do know the CEO, Jeff Lawson. He's a fantastic manager of the company. He's the founder as well, and or co-founder, yeah. And yeah, listening to him will be interesting in the earnings call. So I'm definitely looking forward to that. But other than that, I mean, it's just amazing, you know. So key metrics, let's have a look at that. 265,000 active customers accounts as of the 31st December 2021, compared to 221,000 accounts. That might not seem like a huge number, but think about it. All their customers are business customers. So in the last quarter, we did see that, you know, obviously the business customers, they pay way more, as you see on their revenue figures. But what we've also seen, and hopefully we'll see in the Q4 earnings report, is a reduction of the top 10 customer accounts, because obviously you don't want to be as dependent on your key customers, although they're obviously important for you. But you do want to see that trickle down to actually, you know, have a more diversified portfolio in terms of the customer base. So yeah, that's that. We talked about the not dollar-based net expansion rate, employees. Yep. So that's all good. Let's have a look at the outlook, which is obviously very important in this type of market environment. So they initiated guidance for the first quarter ending March 31st, 2022. Revenue will be expected to be $855 to $865 million dollars. Sorry. Well, that's crazy, because obviously we just had, you know, we kind of had this growth here, which seemed okay, and then the revenue guidance for the last quarter was around 770 million, and now we crushed it with having reported, you know, the 842 million. So now to see that this is not just a one-off quarter, something happened and you know, was a one-off event where they gained some revenue in that specific quarter, and that's why they have this massive growth. No, they're actually saying, well, this is now the new baseline, and from here onwards we're still growing. I mean, I don't know what percentage-wise that is, but it's definitely around a 20% at least. Growth here to an 865 million for the first quarter of the year, whilst, you know, a lot of other companies we're seeing out there are a bit more cautious. They're trying to reduce guidance, and you know, that's usually what causes any investor sell-off after hours, if they reduce the guidance and it's not as good as it seemed or as people expected. So there would be a year-over-year growth of 45 to 47%, and obviously we also want to look at the organic growth, which we have here as well. So out of the 740 million for Q3, we had a 606 million organic growth, which is what you want to see, right? You just don't want to say, they're just growing because they keep buying companies or acquiring new revenue streams. No, it's actually organic growth of the company. So that means there's still much room to go. And you see that out of the 45%, 32% to 34% will be organic growth. And then further, we do want to see a reduction here in non-GAAP losses. I think that's kind of in line with the loss we've seen right now, if I'm not mistaken. We did have a non-GAAP loss, yeah. So of kind of non-GAAP loss. Where is it? Here, 27 million. We do expect kind of on the lower end the same thing. So obviously that would be good if we keep it in that range, because what was a concern for investors was increased marketing expenditure and other sort of operating expenses that were not in line with the revenue increase. So we did see a lot of marketing expenditures increase unproportional to basically the revenue increase. So although revenue increased a lot, selling and admin and marketing expenditure just increased even further. So yeah, the loss per share, yeah, very similar to Q4, which obviously was a strong beat. So we do want to see that, and that's good. So I do think that's yeah, the reason is definitely crushing earnings right now, setting that high revenue number that we've just seen as a new baseline for the guidance of Q1 2022. I think that's what's caused this huge up move into the stock. I mean, we do have to be careful in this type of environment, you know, with some of the macro factors affecting valuations here if interest rates get increased. So we do have to keep an eye on the valuation. I mean, obviously investors are happy to pay that multiple here at that point, because the growth is just outstanding, and if they can keep continuing that growth at that rate, then obviously a higher multiple is justified. You just have to do your own research and due diligence to find out what is the actual growth rate and multiple that is justified for that growth rate of revenue that we have at the moment. And obviously, you know, will be important to see if in the conference call they say anything about, you know, becoming profitable and going forward, whether, you know, we do see a profit soon. And at the moment 31 analysts are covering that stock. They had a sales year growth estimate for 57, which was obviously crushed. Next year 30%, so I think that's in line with the Q1, maybe slightly below that with the Q1 estimate. But we do have, you know, an estimate, analyst estimate for the earnings per share of 15 cents around, or 1 cent, yeah, for next year. Basically, we do wanna, where is it, earnings estimate? So we do think that the average estimate is around a break even basically for 2022. Some of the analysts do expect a profit for the year, but we'll have to see. I mean, at the moment, the company and the management is still projecting a loss for the first quarter, so there would have to be a sudden reduction of operating expenses to actually use that 50 plus gross margin to get some down to your net income. So we'll have to see about that. Yeah, but this was a quick update on Twilio. I thought I'd get that out as quickly as possible, because obviously it's a huge move after hours. Let me know in the comments what you think about it, and also subscribe to the channel if you're new here and if you like that content, for more in future. See you.